The Fed has to do what it has to do. And it's a little bit of a difficult guessing game to figure out whether it's going to be September, whether it's going to be December or 2016. There's a lot of money riding on that decision in the bond markets, obviously, and to an extent in the equity markets. But as far as India is concerned, I think we've got the layers of defense that we need at this stage to be able to deal with the decision whenever it comes. Obviously, we've made sure our fundamentals are strong, our macroeconomy is very strong right now. Secondly, we've got unprecedented level of foreign exchange reserves. And third, I think just in terms of the policies that we've been following, even sort of on a short-term tactical basis, what we're trying to do with respect to stimulating growth in the economy and so on, has also positioned us well. So I think, let the decision come when it may. The Fed has to do what it has to do, but I think we've put ourselves in a good spot.
So we're in a good spot, and both the IMF and the World Bank have chosen to call us the bright spot and the shining spot and all of that. But in the commentary, the Federal Reserve does say that the policy will be accommodative even post-lift off. So it doesn't seem to be a one-way trajectory. It seems to be a policy-by-policy decision even after the token hike does happen, which many people believe will be done only to assuage markets. How does this really move the needle as far as India is concerned? I get your point, and I appreciate it that we are very well placed than we were, say, a year and a half back when he first murmured the word taper. But how does this really move needle as far as markets in India are concerned?
I think markets in India really have to look at the next phase of the market rally, if you will. And that phase is really going to be driven by earnings and revenue growth in India. And as you know, particularly for Indian companies, the vast majority of them are driven by domestic growth. And that's where I think the building blocks that we put in place, whether it's the public investment, the lower interest rates, and then of course the structural reforms that we're working on, are really going to drive domestic profitability. And so when the earnings cycle takes off, I think in India, that should offset whatever the Fed is going to do. As far as equity investors are concerned, they've known for a long time that Fed is going to raise rates, and obviously that's been factored into their thinking about equity markets. I think it's on the bond and the fixed income side that you have to worry very much about what's going to happen with the yield curve and where the Fed is going to go. And that's where the timing does make a difference. But again, if you look at India's bond markets, they're much smaller.
That's right.
And of course, there are restrictions in terms of particularly what you can do on the short tenor side. And then that's where I think, while there might be some, volatility as far as the long end of the yield curve is concerned, the short end I think already has pretty much priced in where the Fed is likely to go.
I appreciate the point that you referred to, which is earnings in India, and I'm going to touch upon that next. But I particularly want to talk to you about the markets. There was a lot of euphoria, and people believe it was irrational euphoria on the Rahul Street, and of course a lot of the confidence was coming from a change in regime here in the centre. Of late there has been a very painful correction in the market. What do you attribute this weakness to? I know corporate earnings have not picked up at all. They were expected to pick up in this quarter. It's unlikely to happen. I'm going to speak to you about corporate earnings in just a while. But what is causing so much pain in the market? Is the correction in accordance with what you had envisaged? Are people beginning to lose faith in the India story?
Supriya, there's a famous statement about the markets, which is in the short run, they are a voting machine, but in the long run, they are a weighing machine. And of course, as far as the Indian markets are concerned, we have a lot of people voting this way or that way.
That's right.
On a short-term basis. You really have to look at the Indian market in terms of three sets of investors, right? There's one set of investors that's very much what are called the noise traders, or the traders that are looking at the market on a very short-term, day-to-day basis. And those flows go in and out, and so we don't have to really get too worried about that noise. Then there's a second set of investors that are more focused on what's happening around the world in terms of asset allocation.
That's right.
And these are large index funds and so on. And then depending on what the long-term view is on rates and growth and so on, can switch money in and out of markets very quickly. And I think there's been quite a bit of that in India, particularly with China obviously having picked up.
That's right.
And India's relative attractiveness having dropped. So we see those flows flows because of these asset allocation moves that people do. And then there's a third class of investors who are really the long-term investors, whether they are foreign investors or domestic investors. So I think we've had obviously a lot of the people, taking very short-term positions based on what has happened politically. Then we've had, various waves of asset allocation money moving around. But if you really look at the long-term investors, and those are the ones, that's the weighing machine part of the market, which really tells you how companies are doing, how the economy is doing. I think if you speak to them, you'll find, and you'll see that when you speak to the strategists as well, is that there is in fact a very, very strong view that India is really the emerging market to be in on a 3-5 year view, and everybody is saying that that's where they want to be across emerging markets when they take a slightly longer term view.
So the long-term bet is still on India, is what you're essentially saying here. But I have a question to ask of you. We saw the huge surge in fund flows coming into India. Is that stupendous surge behind us? Because look at China, it's rallying and it's attracting funds as well. We are competing with that market. Will you admit at this stage that the surge of funds that we saw in inflows is perhaps behind us? That's a thing of the past.
No, that's very difficult to say, Supriya, because that depends entirely on relative attractiveness of markets. And the relative attractiveness of markets, depending on a variety of factors, can change. Obviously, right now China is hot for a variety of reasons, but a lot of people have argued that the money could flow out of China as quickly as it's gone in. And if that happens, then again India being attractive from the long term could benefit from those flows. For instance, there's emerging market money that's gone into other markets such as Russia, such as markets in Africa, obviously markets in Southeast Asia. If there are challenges there or issues there, that money could flow back into India again. So it's very hard to say where that asset allocation money is going to go on a month-to-month basis. We just have to kind of wait and see how all of that develops.
Because we talk sense and sensibility with you, even as far as markets and macros are concerned, the two things that have spooked markets, at least from a bird's eye view, is the RBI commentary and of course a weak monsoon and coupled with corporate earnings. I'm going to talk to you about the RBI commentary. You are an eternal optimist. Do you believe at some stage, and because data now seems to suggest inflation is still very much under control, even though the monsoon seems to be deficient, do you believe the RBI was over-hawkish? Were they far too pessimistic in their commentary at least?
Not at all. I mean, as I've said over and over again, the RBI is a very professional, data-driven organization, and I think what you heard from the RBI was a view that we have to wait for data to come in before they take the next step. That's fundamentally all that they said, and they said that there's data that has to come about the monsoon, there's data that has to come about what's happening with food price inflation, which is notoriously volatile at this time of the year, and there is data that has to come in terms of the economic growth that they can see on the ground.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.